Welcome to today's deep dive. We're looking at October 2nd, and wow, these markets. Talk about a roller coaster,
It's
right?
definitely one of those days. You really have to dig into the details.
Yeah.
What's wild is you've got Saudi Arabia hinting at $150 oil, then you've got Bitcoin potentially taking off. It's like, are these things even related?
Mhm.
But they all kind of point to the same thing, right? Like this underlying market uncertainty.
Yeah, uncertainty, and maybe a little bit of what are they thinking? I mean, look at Tesla. They just blew past delivery expectations. Usually that sends investors, racing for their brokers, but not this time. Stock actually dipped.
It's funny. It's like Tesla can't catch a break even when they're killing it, I think, honestly. They've set the bar so high that for investors, anything short of total market domination
Hmm.
just doesn't cut it. It really makes you wonder, are we setting ourselves up for a lost decade in the stock market where those huge gains just dry up?
Lost decade is a pretty scary thought. We'll have to unpack that a bit more later. But for now, let's switch gears to something else that's making businesses nervous, the November elections.
Yeah.
We're seeing hiring slowdowns all over the place, like everyone just hitting the pause button waiting to see what happens.
Right. And the thing is, that hesitation, it can become a self-fulfilling prophecy. Like businesses hesitate to hire, hesitate to invest because of that political uncertainty. And that can actually cause the economy to slow down, which just feeds back into that anxiety. It's a
Yeah.
vicious cycle.
Yeah, like a game of chicken with the whole economy on the line. And speaking of things that could send the economy into a tailspin, we've got crude oil prices jumping almost 3% after that Iranian missile attack and, well, Israel's vow to respond, as they put it, painfully.
It really highlights how interconnected everything is.
Okay.
We can be over here talking about electric cars and green energy, and then, bam, a geopolitical event halfway across the world throws the whole energy market into chaos. And suddenly, everyone remembers how reliant we still are on fossil fuels.
Definitely throws a wrench in things,
Yeah.
especially for anyone hoping for a break at the gas pump. Right. Okay, so we've got political uncertainty, potential energy shocks. What else is bubbling up in the economic cauldron today? What else is going on?
Well, the latest ADP jobs report just came out. It's a bit of a mixed bag, to be honest. Shows 143,000 new jobs, which, on the surface, sounds pretty good. But it's actually slower growth than we've seen in recent months.
Yeah.
And it comes with a slowdown in wage growth, too.
Okay, hold on. Back up for a second. For those of us who don't have ADP report on speed dial, what exactly does all that mean? And why should we care?
Sure. So the ADP report, that's automatic data processing, is a really important indicator of how healthy the job market is. Basically, it's a monthly survey of private sector employment, and a lot of people see it as a sneak peek at what the government's official jobs report is going to say.
Yeah.
Now, the fact that it's showing slower job growth, that might be a sign that the labor market's cooling down a bit.
Okay, so slower job growth, a cooling labor market. What does that mean for everyday people? What's the takeaway for anyone looking for a job, anyone worried about inflation?
Well, for job seekers, it could mean that competition is about to get fierce. Instead of having their pick of offers, they might be up against way more candidates for the same position. As for inflation, well, a cooling labor market could help to slow down those price increases that are driven by wages. Less demand for labor, wages don't rise as fast. And that has a ripple effect on prices for everything else. But it's complicated. There are always other factors to consider.
So we're talking cooling labor market, slowing job growth. But does that really line up with what we're seeing from some of these big companies? Like Nike's bringing in a new CEO, trying to, I don't know, shake things up after those sales figures. There's talk about a turnaround, but even their timeline for a comeback, people are kind of iffy on it.
Yeah, Nike's interesting. I mean, they're like the biggest name in athletic wear, right? But even giants, they're not immune to things changing, consumer habits, the market shifting. Their issues, they kind of highlight this theme we keep coming back to, don't we? Uncertainty. It's everywhere. I mean, we see it in the global economy, but it's also happening in every boardroom in America.
And sometimes what happens in those boardrooms, it has, real world consequences. Look at LPL Financial. Their CEO gets fired, right? Workplace violations. Stock takes a hit. It's easy to forget when you're looking at numbers on a screen, but those market movements, they represent real people, real companies, and, sometimes real ethical lines getting crossed.
100%.
Yeah.
Every single stock ticker, it's telling a story. And some of those stories, they're not pretty. Misconduct, missteps. It reminds us that ethical behavior is not just some add-on to a business plan,
Right.
right? It's crucial, fundamental to long-term success, for sure.
Reality check, right? But hey, it's not all doom and gloom today. Got to look for those silver linings, right? Analysts are saying Alphabet stock, which has been, a little quiet lately, it might be ready for a comeback. And then there's Bitcoin. always the wild card. If this win streak keeps up, we could see it hit that $74,000 mark. Wouldn't that be something?
Oh, absolutely.
Yeah.
Even in times like these, there are always going to be opportunities. And that's what makes it exciting, right? Because, see, some investors, they're chasing those wins, those green arrows on the screen. But others, they're pumping the brakes a little. Remembering, what was it? Be fearful when others are greedy. Wise words.
Which brings us back to that lost decade warning, doesn't it? Warren Buffett. Hard to argue with the guy. Seems pretty relevant today, I'd say. But for those of us who don't have every Buffett quote memorized, break it down for us. What does a lost decade in the stock market actually mean? And what could it mean for the average investor?
So a lost decade, it basically means things stagnate. For years, you see little to no growth year after year. It's not about some big crash, but more like acknowledging that this crazy growth we've seen, especially in tech, it might not last forever.
So less about doom, more about like a reality check?
Exactly. Markets, they go in cycles. What goes up, it's got to come down eventually, or at least level off for a bit.
So let's say this lost decade thing, it's real. Those like massive gains we've seen, maybe those days are over. What's the play then? What's the average investor supposed to do? Like just hide our money in the mattress and wait it out?
Well, that's where, little Buffett wisdom comes in handy. When everyone else is freaking out, that's usually the time to, keep your eyes open for opportunities. Doesn't mean throwing caution to the wind. It's about strategy, research, slow and steady.
So maybe this whole lost decade thing, it's not really about like bracing for disaster. Maybe it's more about, I don't know, adjusting what we expect, right? Like shifting from that like get rich quick mindset to more of a build wealth over time approach, something like that.
That's it exactly. We have to remember, markets move in cycles. It's natural. And instead of being afraid of those cycles, we can learn to, work with them.
Speaking of working with things, what's like one big takeaway you think people listening should hold on to from all this market craziness today? What's the like guiding principle to navigate all this uncertainty?
Honestly, it always comes back to knowledge. The more you understand about like what's actually driving things, geopolitical stuff, but also things like how consumer behavior is changing, the better you'll be at making smart decisions.
It's about connecting those dots, right? Like we've been doing today, we've talked about how like a strike at the ports on the East Coast, it can disrupt the whole supply chain and suddenly the auto industry is feeling the effects. Or how like a CEO does something, even if it seems totally unrelated to like profits and losses, it can tank a company's stock, stuff like that.
Exactly. It is all connected. And when you start to see those connections, it's like you see the bigger picture. You don't get so caught up in the day-to-day market swings, and you can start making decisions that, actually get you closer to your long-term financial goals.
So for our listeners out there, the ones who are like fired up, ready to roll up their sleeves and start connecting those dots themselves, what's one thing they could look into? Based on everything we've talked about today, what's a good starting point?
I think it would be really valuable to understand the history of lost decades in the stock market. Like, when have they happened before? What caused them? And maybe most importantly, how did investors not only survive those times, but actually do well? It's not about, trying to predict the future. It's about arming yourself with some historical context so you can make smarter decisions.
Great advice. Knowledge is power, right?
Oh.
And a little history lesson never hurt. Thanks for joining us for this deep dive into, well, all the craziness happening in the markets today. Until next time, remember, stay curious, stay informed, and keep asking those questions.
Always a pleasure. I always enjoy these deep dives with you and with our listeners, of course.